FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, I'm going to answer one of the questions that I get asked literally almost every day. And the question is, what are my favorite setups to take or to trade with any particular pair? So today in this video guys, I'm going to go ahead and break down my favorite setups that I like to trade, and I'll give you some recent examples of those particular trades. All right, so that's what we're going to do on this particular video guys. I'm going to show you and walk you through the process of how I pick out the best possible trades that I particularly like to trade. All right, so without further ado guys, let's get this started. All right, so the first thing that we're going to do is we're going to go over to Euro pound. This was actually yesterday. Now, for some reason, I don't know why, but I really enjoy taking type 3 setups. So this is another prime example of a type 3 setup that I love taking, and so here's why. So on this particular setup, we actually have a couple different confirmations that we can use to our favor. All right, so if we zoom out first, we start just by literally counting first the actual levels here. So we're looking at, let's say, call this peak, and we'll have basically level 1 here. We'll have level 2 right here, and then this will be level 3. Now, what I'm looking for is either a reversal or essentially a type 3 setup to go down and do a peak formation low. All right, and essentially that's what we end up getting here. Okay, so what is the setup here? You can see basically that based on how price is going here, we're basically going to have a type 3 setup that is coming and getting stuck in the middle of the range. So that's one thing that you can look for. Another thing is, you don't see it very well, but this orange line here is essentially previous week's low. Okay, so that's another thing. So you're basically bouncing off of the previous week's low, off of the actual middle of the range, and you get this early move right here, and then a pushback, and then this candle along with this bar. So essentially you end up getting a cord of wood, which is this right here. So 1, 2, 3, 4 candles, straight bars straight across. So you get a cord of wood here, and so that's one of the good setups that I like to take. One of my favorite setups that I like to take, especially when it's pinning to the middle of the range, and then basically you have the 50 above it. All right, now if you look at the TDI here, you already know that the market trend is down because the yellow line, the market sentiment line, is essentially below the 50. So you see that, and then also take a look at what you're getting right here, which is the first leg, second leg, and then it drops off. You see that? So that's another confirmation on the TDI as well that you can use. Okay, now, so this particular setup, what's the setup and what really is the entry and stuff like that. So for this particular setup, the entry candle is going to be, the entry trigger for me is basically this candle right here. All right, so once this candle is over, I'm hoping for a retracement. Now, you don't always get a retracement. All right, in this case, you did get a retracement, so your entry's super tight. So your entry's anywhere, I typically like to do half the bar. So if I can get a retracement, basically that carries at least half the bar, which is about right here, that'll give me enough space basically to have, if I wanted to, up to a 15 pip stop loss. And in this case, really the stop loss, you could have 15 pips, and you can see you're going basically up to the top of the Asian range, but also you have the 50 there to help guard your stop loss. Now, of course, when you get down to essentially doing a take profit, it's basically a 2-to-1 risk to reward ratio that I normally like to take. Typically 15 pip stop loss, 30 pip take profit. And on any pairs, like if I ever trade an NZD or AUD pair, JPY pair, I typically would have to use a higher stop loss just because the pip value on those pairs is a lot bigger. So stop losses would be way bigger than 15 pips, so maybe 20, 25, sometimes 30 pips, it depends. But in this case, on regular pairs, Euro Pound, Pound USD, stuff like that, Euro JPY, Pound CAD, Pound Swiss, you can typically do about 15 pips of a stop loss, and then 2-to-1 risk reward, which is 30 pips. Obviously, you see this thing went way further than 30 pips. So the strategy behind this, or the idea once you take the trade, is if you want to get as much of the trade as possible after you reach your take profit of 30 pips, what you basically could do is just basically follow the 5 EMA. And so once price closes above the 5 EMA, so in this case here, it would basically be like this candle here, you would get out, right? So essentially you'd be looking at somewhere around 53 pips or so. All right, but that's essentially one of my favorite trades to take here. Another one that literally did the same thing was on Pound USD, and same thing yesterday. Actually, you could see we ended up getting a cord of wood. You could see here we ended up getting a cord of wood, back and forth, back and forth, back and forth. This candle here is the one that tells me, hey, we're going to go long on this. And so same idea, wait for the pullback. And there's the 2-to-1 risk to reward ratio. And that's the trade. Same thing. So that would be the trade here. So how many confirmations do you have? You have obviously the pattern. It's a really good pattern to trade because on a line chart, all it is a W, right? So you have the quarter wood, you have the pattern type 3 set up, you're pinning to the 50 EMA, so the 50 is going to help push price up. And then on the TDI, you really don't get any kind of kind of good confirmation on the TDI. The only thing that you have is the market sentiment obviously is above the 50, which is the yellow line. So ideally the market is telling you that it should go higher. And then you could see also on the TDI, you see how you have the squeeze here of the Bollinger Bands on the outside here. So pattern timing is there. Market sentiment on the TDI is there as well. So those two setups are two of my favorites to take on any of the pound pairs, euro pound pairs, normal setup. Type 3 setups, I don't know why I enjoy them, because I like bounces off the 50. The last one is on gold that happened yesterday as well. And this one here, here's why I like this one. I like this one because I like trading when we're all the way at the bottom and we're basically waiting for a reversal, right? So if we look back at gold here, and let's just say we start counting from up here and call this peak formation high, and then we call this level 1 here, we call this level 2, and then this basically would be level 3, right? So those are your 3 levels. You're looking for basically a reversal. Now, if you go up to the higher time frames, you know that this is all this is literally, look, all this is down here, this huge wick. You see how we're basically right on that wick? You see how they're wicking down? Why do you think they're wicking down? They're wicking down to get as many people as possible to basically sell. so they can get them trapped. And that's exactly what they did here for basically 2 days. They went sideways here. You can see doji candles here back to back, right? And you see how basically it ended here. Look at how the candles ended right at the, you know, the wick here, 1863. Look where the bodies ended up, 1863. Okay, so all this, you have a range of, you know, 73 pips there. These wicks are close to about over 120 pips. That's huge. It's huge. So you go back to the regular time frame here, and what I like is essentially when price is giving me a type 1 setup, and we have so many different types of confirmations that we can use. So we have the levels. So we're at level 3. We know that potentially we're looking for rise out of it, you know, to basically start a new uptrend. So we have basically price that pins here, same spots here, same spots here, all throughout this area here, pinning to the previous week's low right there. See that? All pins. This is all market maker behavior. That's all it is. It's behavior. So getting that behavior, understanding the market maker behavior is huge. And so if you can understand the behavior, you'll understand why this is happening. And so once you know that why this is happening, it's over, because you'll be able to trade it, right? And so you can see what happens. You get a huge move the entire day, right? Nice type 1 setup here on gold. During London, first leg here came up, second leg, and then it was gone. All right. So there was the trade, 2-to-1 risk to reward ratio, about 60 pip. Typically is what I use for gold trades, about 60 pip stop loss. Obviously the pip value on gold is huge. So some of these candles, you know, are very big, obviously. So that's why you got to use a way bigger stop loss than what you would like. Honestly, if you're going to trade gold, you definitely want to use a lower lot size, and definitely do back testing on gold, because gold is very unpredictable, and it can move very quickly against you and literally wipe out your account if you don't know what you're doing. So if you're going to trade gold, just make sure you do back testing first before you trade it. But those are essentially my favorite types of trades. So we saw type 3 trades, and then basically type 1 trades coming out of level 3. And basically we're looking for the turnaround, because these trades you can basically hold for the rest of the actual cycle, right? So if you think about you know, the cycle that's basically trying to develop here, which is, you know, the W and then a pullback, and then all the way up again. If you can get essentially a trade set up at the bottom here, you have potential of holding it for 2 or 3 days, and now you can basically turn it into a swing trade. But those are my favorite trades, guys. So now you know what I like to take, and I'm willing to wait a couple of days, a week, I don't care, for these kind of trade setups. I'm willing to wait for these trade setups. The question is, whatever trade setup you like, are you willing to wait for it to show up and then trade it, and not just trade any kind of setup? If you want to be consistent during trading, you have to consistently be able to trade the same setups over and over and over again. And so you might realize that if you're back testing, you might realize that you're not very good at type 3s, or you're not very good at type 2s. You might be only good at type 1s, and that's perfectly fine. So you're only trading type 1s. So then if you're only trading type 1s, then you have to, let's say, back test pairs and figure out which pairs give you type 1 patterns the most. There's no point in trying to trade a pair that consistently will not produce type 1 patterns. So this is where the backtesting plays a huge part in allowing you to grow consistent in your trading. All right. So remember that the more confirmations that you have, obviously the better. So remember that you're basically like a detective looking for evidence. The more evidence you have, that's going to be the pair that you trade. All right, guys. So I hope this was helpful. I hope that you found value in this, guys. If you need any more help, we have the last class of the year starting October 5th. There's only 4 more spots available, guys. Thank you so much. All the information for that is in the link in the description. Thank you and have a great rest of your week.